the repercussions for gold. First, the dollar was weaponized by the US. Now gold is being weaponized by the rest of the world. They're all buying gold. All countries east of Germany are buying gold. Even Poland is adding to their gold holdings 10x. So we have the weaponization of the dollar, the weaponization of gold. And when gold starts to move because of the weaponization, and everything is coming together now. So we call this a perfect storm for commodities, for gold and commodities, because you have the debasement of currency. So people are fleeing towards hard assets. You have the geopolitical tension. You have this worldwide conflict now in which commodities are becoming a weapon.
Willem Middelkoop, founder of the Commodity Discovery Fund, observes that empires rise and fall, often replaced by new powers like China today. As the old power resists, a perfect storm for commodities like gold emerges. Investors increasingly turn to hard assets due to currency debasement, geopolitical tension, and the potential for a worldwide conflict where commodities are weaponized. China's overall gold demand is consistently strong. Underlining this shift, in 2023, China imported over 1,400 tons of gold, making it the most significant gold importer in the world. With negligible exports, China's net gold imports remain around 1,400 tons. Additionally, China is the world's largest gold producer, with 375 tons produced last year. India, another major gold importer, brought in 260 tons of gold from January to May 2024, surpassing previous year's figures. This surge in gold imports is attributed to rising inflation, economic uncertainties, and increased investment demand. Middelkoop also highlights that the West seems headed for a world war, eager to confront rising nations. This significantly impacts gold. While the US weaponized the dollar, other countries are now weaponizing gold. Nations east of Germany, including Poland, are increasing their gold reserves. Large investors typically buy gold during threats of war, which is evident now. The BRICS Economic Alliance's new development bank has announced plans to abandon the US dollar entirely within the next 3 years. The collective will soon integrate methods to replace the greenback as a reserve currency. China and Russia are orchestrating this move away from the dollar. Recent speculation suggests that Saudi Arabia might also abandon the greenback in oil trades, potentially settling such trades in yuan, as China buys over 20% of the country's oil exports. This shift would have massive ramifications for the currency. Join us as we delve into Willem Middelkoop's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
US and its allies, and that's just 1.5 billion people. They treat Russia, China, Iran, North Korea like the new axis of evil, and we need to fight them. They openly say we need to fight at 3 fronts. If you look at the American media, and then if you compare it like the 1930s, and now the rest of the world is against us, against West. Even EU, the EU guy, Borrell, he said it's the West against the rest now. There are 140 countries, who don't follow Western sanctions. All countries in Middle America, all countries in South America, Latin America, all countries in the Middle East, all countries in Africa don't join Western in sanctions against Russia. This doesn't make them friends of Putin. They don't agree with our point of view, our Western point of view, which is full of double standards and hypocrisy. And we, the West, we're running towards a world war. Like we want to fight them all. And the repercussions, to come back to your question, the repercussions for gold. First, the dollar was weaponized by the US. Now gold is being weaponized by the rest of the world. They're all buying gold. All countries east of Germany are buying gold. Even Poland is adding to their gold holdings 10x. And so we have the weaponization of the dollar, the weaponization of gold. And when gold starts to move because of the weaponization, and remember, large investors like sovereign wealth funds or central banks or institutional investors, many of them only buy gold when there's war in the air, when there's the smell of war in the air. And that's what we see now. So these guys, they have a monopoly in printing money. And what do? They buy gold. They print money and they buy gold. So it's a no-brainer now. And we've been discussing this for 20 years. If you look at my first writings, early 2000s, still online, I've always been warning there will come a time and day that people will start to flee towards gold. And because of the debasement of currency, which has nothing to do with the global conflict, or in a way it has, because of course the US has to fight to maintain its hegemony. And so it's all connected. And if you study history, empires rise and fall. And when they fall, it's always because there's a new kid on the block who's becoming superior, China now, and the old guy won't go down without a fight. And this has huge repercussions, and everything is coming together now. So we call this a perfect storm for commodities, for gold and commodities, because you have the debasement of currency, so people are fleeing towards hard assets. You have the geopolitical tension, you have this worldwide conflict now, in which commodities are becoming a weapon. Just study what Zoltan Pozsar has been writing about this in the last few years. And then you have, on top of this, we're entering for the first time in 1,000 years, we're entering an era of shortages, just for shortages in commodities. Jeff Curry, the former head of Goldman Sachs Commodities, he said, we're running out of everything. We do a lot of supply and demand studies here in our office, especially after 25, after 2030. Everything gets scarce. This is troubling, but for investors, it's like the best situation you could wish yourself to be in as a commodity fund manager.
As countries from the BRICS group and regions including the Middle East and Asia increase the use of local currencies for cross-border payments, there is a growing perception that the dollar's dominance in international finance is waning, particularly in global oil markets and the use of the petrodollar. Willem Middelkoop asserts that the era of the U.S. being the world's uncontested leader is over. Although the formal end of the petrodollar deal might not seem critical, as Saudi Arabia now sells oil in various currencies, it signifies that global transactions are no longer centered solely on the U.S. dollar. China has become Saudi Arabia's largest oil customer, accounting for over 20% of the kingdom's oil exports. Beijing has established close trade-driven relationships throughout the Middle East, where U.S. influence has waned. Saudi Arabia's willingness to diversify the currencies used in selling its oil aligns with a broader strategy to expand its international relations beyond the United States and Europe. This shift reflects a more significant trend of countries seeking to reduce their reliance on the dollar, fostering stronger economic ties within Asia and other regions. Let's get back to the interview.
I read the mainstream media here in the West, they still laugh about the BRICS, It's like what Gandhi said. First it was ignored. Now we reached the we laugh at them stage. And then the next one, we'll fight them. That's starting now. And I'm afraid, and then they will win the BRICS. Because as said, if it was just Iran, North Korea, Russia, and China, you could have your doubts who was winning. But 140 countries, guys, who are not supporting the West anymore. Doesn't mean they're all enemies. It's just they don't follow US as the world policeman, as the world mentor or leader. The days that the US was the leader of the world is over. And I don't care whether there's a formal end of a contract for the petrodollar deal, it doesn't matter anymore. Saudi is selling oil in all currencies. Doesn't mean the dollar will collapse. It's just there's competition. It's not about the US anymore. And the Wall Street Journal, they published a story, and they even can't ignore it any longer. And they published a story headlined, "Will Debt Sink the American Empire?" Question mark. I've been a journalist for 20 years. When you publish a story like that with a question mark, it means you can't say you already know the answer, but writing it, it's telling the story. Even the Wall Street Journal can't ignore it any longer. We're just waiting now for the accidents starting to happen in the bond market. Well, bonds declined by 50% in the last 2-3 years. So it's a fight between a paper dollar-based system coming from the West. It started in 1944, but then it was still gold-backed in Bretton Woods. Then 1971, we entered Bretton Woods 2, part 2. The dollar became, fiat money. And now we're reaching the end. And as Zoltan Pozsar has written so beautifully shortly after the Russian invasion in Ukraine, we're entering the start of a new monetary system centered around commodity-based currencies coming from the East. So it's the Western paper dollar system against the BRICS hard-backed commodity-based system. But it's still in development. And as Ronnie also knows, he's a student of monetary history as well. These changes take time, you know. These changes might take another 10, 15, 20 years to fully play out. And people always think it will happen next week. So we reached an end to the petrodollar deal, so then the dollar will collapse this week. No, that's not how it works, guys. As an investor, it's very important to understand in which train you're sitting, where the train is heading, and you don't know what time you'll arrive at the last station. But the trend is clear, and I started writing about this almost 20 years ago. And when I published my first book in 2007, I was looking to the fog. Even Lehman hasn't happened because it was 12 months ahead of Lehman. And we were looking into the fog, but we knew and felt the direction we were heading. But now it's so clear where we're, what train we are driving. And
with the diminishing dominance of the US dollar, the increasing importance of gold, and the rise of local currencies in international transactions, what impact do you think these changes will have on the global balance of power? And how should investors and policymakers prepare for this new economic landscape? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.